In today's episode with Dan and Samantha, we are breaking down the cattle markets once again. Dan and Samantha bring some great insight on what we have been seeing over the past few weeks with the cattle markets. We also discuss what we are going to be seeing as we round out 2025, some predictions as we start into 2026, and then some just reflection on what happened over the past year in the cattle markets and just what a wild ride it has been in 2025. Dane and Samantha break all of that down for us in today's episode. Before we hop in with them, if you are watching on YouTube, make sure that you take a second to go subscribe to our channel and like this episode. And if you are listening on any of our podcast platforms, make sure that you are following the show and take a second to go rate and review it in the show notes down below as well. And without further ado, let's go ahead and hear from Dan and Samantha. Dan, Samantha, welcome back to the podcast. How has life been over the past week in the wonderful state of Iowa and Kansas? Well, I guess I know how Kansas has been over the past week, Samantha, but how is everyone?
How was Florida, Dan?
Oh, it was good. It was warm as usual. It's been a while, so it was nice to get out for just a couple days and enjoy some sunshine again. Iowa's been brutal to start this winter off in like a lion, hopefully out like a lamb, but it's been brutal.
Yeah, I can relate with Kansas too. Like right now we have a little bit of sunshine coming in and it's warming up a little bit, but it has been so cold and cloudy and miserable. So I hope you soaked up the sunshine for all of us in Florida. I really do.
Yeah. Boy, it'd be nice to just pack up, move all the cattle, feed cattle down there in the wintertime, and then bring them back home in the summer. And yeah, it doesn't work that way. But yeah, the weather was nice.
We could snowbird.
Hey, I know. Livestock producers don't get that chance.
Yes, very much so. Well, what has been going on in the markets? Who wants to start us out? What are our thoughts?
Just been a lot of chop the last 2-3 days. Market's very undecisive as far as if it wants to punch through some of these Fibonacci retracement levels, if it wants to go up and attempt filling some of these gaps again. We had a chance on the way down to fill them, failed, inevitably went lower, broke below 200-day moving averages, and now we're back above those averages and trying to chase those gaps again. It's kind of in a sideways pattern, like I mentioned, for 2-3 days. An old adage is never sell a sleeper. So I'm a little optimistic. I think cash has an opportunity this week, but we'll see how that goes. Some of the sale barns seen a little bit bigger runs, but overall, not a huge amount traded to really think anybody's going to step out of the market. That combined with, I don't think they can. I think they've got the orders. They need some ribeyes for Christmas, so I think they're going to have to keep this kill up there in the upper 500s. So that's a little optimistic there.
Yeah. I'd love to hear a little bit of optimism. Samantha, what are your thoughts?
Yeah, I agree. Cash is really strong right now. The need for placements is really high. People are finally getting those long-time weaned calves to town. Seeing a little bit less market transparency. Texas now doesn't meet confidentiality laws to be reporting on the negotiated fed cattle trade. Like I said, that takes out a lot of transparency out of the market. Even though they're trading at such a low volume, they have such a high influence on the market. So, if it were up to me, I would say we do need a little more or less restrictions on those confidentiality guidelines so we can be seeing that trade. Because really, who knows when that's going to come back. So, we already trade at such a low level of cash trade itself. Most everything's traded at formula trade, roughly 75 to 80% of that. So we were already getting such a small window into what's going on in the cash market in itself. So to not have those bids and not see that transparency, I think is going to have an effect moving forward. Also, something to look at, the demand for ground beef is kind of unseasonably high for this time of year. So we're going to see less of an emphasis on those higher end cuts as we move into the holiday season. As far as technicals go, I don't really keep up with that sort of thing on the futures board. That's Dan's territory, but he talked about last week in his commentary a dead cat bounce. And I know enough to know that means, this rally last week was all done on low open interest. So that doesn't really put the technicals in our favor long term. I think we're going to start seeing more of this pressure first of the year come into play when we start seeing higher import numbers on beef and then getting this south border open. I was optimistic to see slaughter almost reach that 600,000 level last week. And most of it was on 2 to 4 week delivery. So I think that's going to hopefully carry us into the year end. Now, as we move into the first of the year, there's still that high level of uncertainty.
Agree with that. I mean, January, February is typically restaurant season. Be interesting as we roll the calendar and get some fresh new maxed out credit card bills after the Christmas season. Be interesting to see what that restaurant demand's like. As Samantha mentioned, I showed demand is not falling out of bed. There's things of concern. The last 2-3 months you saw volume moved as a whole dropped. At the same time, slaughter dropped and prices were drifting lower. Not falling out of bed, but they held 370 for quite a while, and now we've drifted below that. But you don't want to see all three of those factors going down at the same time. So that's kind of a little thing to keep an eye on. And coming into January, it'll be interesting what that restaurant demand's like. If this winter stays like this all the way through February into March, I would think restaurant demand is just going to be mediocre. I don't think it's going to be extreme because people don't like traveling in this type of weather. It's 30, 40 mile an hour winds up here right now and snowing again. So it's pretty easy to, as she mentioned, take some hamburger, make a casserole at home. So Jan-Feb could be very interesting.
Yeah, definitely. We've got some things on the horizon that we can sit here and we can speculate on what we think is going to happen or what we kind of anticipate is going to happen. But boy, if this market has shown us anything over the past year, it is that hold on to the handlebars because this roller coaster is not slowing down anytime soon. What are our thoughts on just kind of as we continue to move through the year into January? We're starting to close up 2025. My mind isn't even on 2025 anymore. I'm like, that long passed a long time ago. But what are kind of our thoughts as we round out the year and just go into 2026?
Shane?
Go
ahead. Shane talked a little bit in his commentary last week that when we saw the FDA approve a drug to treat the screwworm stuff, that we were seeing funds exit. So that was putting some downward pressure on the market. And then it kind of rebounded after that case of screwworm was confirmed 120 miles south of the border. So I don't think it'll be the first of the year when we see this thing open. I think that was initially the plan. I think it'll be further into the first of the year, but I think when we do get it open, just that initial effect of people having that speculation that they've got all these cattle waiting to just come in, and that could have an effect on the markets. So I think that's going to be the biggest thing going into 2026.
Yeah. I mean, all eyes are sitting around waiting when they're going to drop that bomb on us. At the same time, I still don't think they're going to open all the ports at one crack. We're not going to see a massive glut of cattle come crossing right away. It's a process, just like it was the last 2 times I tried to open it. So the other interesting thing that's been funny to watch is just the psychology of this cattle market. I don't know if you want to call it a luxury or a privilege. I get the privilege more so of talking to a lot of producers across the country. So when I do that, I get to hear, in their voice, in their thoughts, what if they think we're going to new highs, if they think we're going to new lows, and how that changes as the market moves. So, something we've kind of noticed is a lot of producers out there were sitting on their hands, not getting coverage as we were rallying this market higher. And then all of a sudden, Trump comes out, makes some statements, other stuff, started dropping to make that market do what it did there in late October and November. And then there was a lot of panic booking, getting coverage on, getting hedges on. And now the market retraces, as she mentioned, that dead cat bounce on lower open interest. And we're seeing producers once again stalling out, saying, well, if we get back up another 10, 15 higher, then I'll do something. Reward the rally. You can work into this stuff, on percentages. Book 25% when you rally 10, 20 bucks. And if market goes higher again, book another 10, 15, 25%. Just keep rewarding this rally because we don't know when that's going to turn around and fall out of bed again. Back to the psychology, go sit in the sale barns. It's kind of funny. back in early October, I just wiped my hands clean. I'm like, I can't afford these things. What calves were costing weaned, unweaned yearlings, they were all just insanely high. Great for the backgrounder, great for the cow-calf producer. Love to see it. They need their turn. And then all of a sudden the market drops, price drops with them. I think I saw a $400 or $500 head swing in the same type of cattle inside of a month, to the down. And then all of a sudden we put that $400 or $500 back on in 2 weeks. It's pretty remarkable how everybody's opinion went from we're going to zero to now we're going back to the moon. So, like I said, the psychology of all of this, it's been a violent, volatile market, and personally, I don't think it's over. 2026 is set up that it can remain just as volatile. So, the other thing that I hear a lot on the phones is how expensive these LRPs are. I don't disagree. Option volatility went through the roof with this move we've had. So, yeah, you're looking out, if you're going out 40 or, 52 weeks, it gets up there. $20 a hundredweight is a large pill to swallow. But consider coming back in with some options around it. There are ways that we can try and make that a little bit more reasonable. It adds a little bit of risk in trading when we do so, but at the same time, we might protect a window from 320, 325 down to 280. And we might cap your top side up at 370, 380, the old highs. So consider that. It's not a good fit for everyone. And then, like I said, it comes with some risk, but at the same time, if we can cover the top 10, 15, 20% of this market from where it's sitting now, and we leave you open to the old highs, it's sound risk management, in my opinion. And all of a sudden, you can take that $20 a hundredweight LRP premium and turn it into 8, 10, 12, a little bit easier pill to swallow. So at the end of the day, I personally don't think cattle are going to zero. So why do we need to insure them to zero? Put some LRP on, sell a put underneath of them, $40-$50 out of the money, and be happy you got that top end of this market protected.
Yeah, I think if we've learned anything this year, it's that it's a volatile and violent market, and that we can sit here and we can try and predict it all day long, but the market is going to do what the market's going to do. And if the media decides that they want to talk about the cattle market that week, well, hell, all the fundamentals go to shit. So it's one of those situations that we try to have as much predictive ability as possible when it comes to this market and keeping it stabilized for these producers, because we want to have high markets. We want to have all of this, but at the same time, it's going to go up and down. It is a commodity market at the end of the day. And so what that looks like is kind of those fundamentals come into play, but at the same time, we're going to have that roller coaster come in. So you made some really, really great points, Dan. Just as we go into the new year, we are reflecting back on kind of this crazy year that we've had. A little fun question for you guys. What is the most outlandish, most surprising, most wild thing, in your opinion, that happened in the market this year?
Falling off $80 a hundredweight in 2 months? That's insane. I don't think anybody saw that coming anytime soon.
Oh, that was a big drop that fast. I'd have to say some of this option premium that I saw when we were up knocking on the highs, $400 feeder cattle calls were worth $5 to $7. $500 feeder calls, they're still trading at a half a buck. I mean, at one point those things were worth $1.50, $1.60. So to me, when I look at I got to look at crazy. Once again, it comes back to the mentality or the psychology of trading. There's actually people that thought we were going to $500 feeders. They had decent reasons to think so, the supply and all. And at the end of the day, that's quite the move. So watching wild stuff like that, yeah, it's been a ride.
It has definitely been a ride. Well, guys, what else? Is there anything else in the markets we need to hit on? Dan, do you want to hit on grain markets really quick for us?
Yeah, I mean, yesterday we had a grain report come out. A lot of people are calling it a nothing burger. A lot of people were just saying we kicked the can down the road, and that's the facts. They didn't do a whole lot. Overall, the number on corn was a touch bullish, but not as bullish as a lot of people would hope that the USDA would correct their numbers to. The yield, in my opinion and a lot of people's opinion, that yield number from this 2025 crop year needs to come down. At the end of the day, they like to do that in incremental movements. They're not just going to come in and drop the yield from 184 down to, or 182 down to 176 in one report. So we weren't surprised that they did that. Overall, it's very common to see the seasonals just work grains higher as we go into January and February, early March. So, as we recommended here a couple months ago, get your feed bought. Corn was cheap at that time. Wheat's cheap. I'd like to see a little bit more action in that wheat and bean market, get those trending back higher to really give me hope that this rally lasts a little longer than expected. Beans, wheat, they're kind of dragging right here, so I don't think corn's going to get extremely out of hand. It still wouldn't surprise me though if we go up and visit that 470, 480, maybe 495. If we do, I think producers really need to heavily consider getting some hedges in place for 2026 crop year.
Definitely. Samantha, do you have any other closing thoughts on the markets this week or anything else that we didn't hit on?
Not really. Just going back to what Dan said, use the rallies to protect. Sure, we fell off a ways, but we've gained about half of that back. These are still really good prices to protect at. Don't let it fall off another 20, 100 before you pull the trigger.
Yeah, absolutely. Dan, anything else before we close out?
All good here. Hope everybody has a great Christmas. Yeah.
Perfect.
One more quick thing. Very important. Get your prime ribs out of the freezer, get them in the refrigerator, and get them wet aging. Trust me, you won't be disappointed.
Hit up Dan if you need an instruction manual on that. I'm sure he can help provide. Mr. Grill Master over here can do all of that for you.
It's the one nice thing we don't have to worry about. You can't put a prime rib in an air fryer. Yep.
Okay. I regret every day telling you that I do that. My husband now, it is a joke in our house about our air fryer and me cooking my steaks in it. But, they turn out great. They're perfect in the middle and nice and crispy on the outside. And, it's fine. It's fine.
As long as you keep eating steak, I don't really care how you cook it, but I can't help myself.
I can't blame you too much. I can't blame you too much. We are hosting for Christmas, so that is a good reminder for everyone. Get your prime ribs out. Get whatever you're doing out. Hopefully it is steak of some sort. And we hope you guys have a great rest of your week. Dan, Samantha, thank you for your time. As always, to all of our listeners, if you need that coverage that we were talking about today, if you want to just get in contact with someone from our team, talk to Dan, talk to Samantha, anyone else, make sure that you check out the show notes down below. We've got that link where you can figure out what works best for you and get a hold of the team through Cattle USA Insurance. Guys, thank you again for your time. To all of our listeners, we will see you all next week on another episode. Have a good one, y'all.